Welcome back to another vlog. Today we will talk about the best performing stock on the stock market for 2019 so far. Over 100% profit from January 2019 until now, middle of the year. Stay tuned, but before we dive in, subscribe, like the video, share, and let's start. So I was on CNBC and reading through some business news, and I read the following. The best performing stock so far this year is a cosmetic company. So guys, it's not a tech company, it's not an industrial title. It's not one of the big FANG companies like Facebook, Google, Apple, or Amazon. It's actually really a cosmetic company which name is Coty Inc. And basically why the one of the reasons why this company went so much into wealth, so high in prices. So one reason proclaimed that they are just raised over 100% just from January until now, middle of the year, is basically that they investors count on the turnaround of the company, plus another reason which I will talk about now. So first I thought I will dive into some numbers here. So they made 9.4 billion US dollars revenue just in 2018, and which is a 22.84% increase what they did 2017, a year ago, or a year before that. And another year before even, they made, as you can see here, $7.65 billion, which was a 75.91% increase what they did the year before. And these are really good growth numbers for a cosmetic company in this industry, and also good numbers grow of revenue year over year. Now, another reason why the investor seems to be engaged is that they are in the news just recently to buy Kylie Jenner's cosmetic company for a little bit more than $1 billion. And basically, as you might have seen, Kylie Jenner's cosmetic company and herself got a lot of attention because she became the youngest billionaire ever made so fast, so young. And her products, of course, through her social media appearance, are quite big in the news. This is what the cosmetic companies are looking for, which products are trendy, which brands are trendy, and want to buy in this kind of piece of asset to move forward. So let's dive into valuation of the company. And one of my favorite valuation methods, or the very basic ones, are the price earnings ratios and the price sales ratios. So price earning ratios will not really work because they and this what I will come in a minute, they don't make profit, or they didn't make profit last year and the year before, which is, by the way, getting better, which you will see in a minute. So let's jump into the price sales ratio. So you can see on this graphic here that the price sales ratio is very, very, very attractive. So the company barely is valued for $10 billion, which is basically the amount that they almost do by revenue. So it's almost a PS ratio of 1, which is very, very lucrative. And I guess they are on a good way to turn positive this year, and then we can have also a very attractive PE ratio. So let's have a look on the balance numbers. If you look here, last year they did loss of $168 million, and the year before they lost about $422 million. So, you know, almost 1/3 improvement here, which is quite interesting. And I think they maybe can break even this year, which, you know, could be a reason why investors say, you know, but let's buy into the company, super good growth of revenue. However, there's one thing or information that need to be considered. They basically bought the Procter & Gamble's beauty business unit. So, you know, all the revenue goes there as well. And they hope to see, you know, a break even and good effects of this purchase, of this acquisition by 2022. Very interesting as well when we looked into the gross margins is that they have really interesting gross margins of 60 or even getting better, over 60%. Which is very interesting on this kind of products. You know, I always, when I go to this kind of shops and I see some pricing of cosmetics, I really think that, you know, these things are really less to produce, but, you know, you never can underestimate the R&D costs, right? If you look at the chart, then you can see that, you know, around January 2019 was the time where they really started to grow. A lot of investors think also that the main controlling company behind Coty is basically GAB Holdings, and they also put a new CEO on the controlling part of the company. So, you know, there's a lot of hopes that he turned the company around. He brings much more experience to the company, and let's have a look how finally I see this kind of stuff. So considering it all, I have one single opinion to say about something like this. So if I see companies already on CNBC for 100% growth, it's most of the time almost too late for the retail investors, because, you know, people jump on that and it's growth maybe 10-20% on the short term, and then basically drops down because the big investors get out their money and so on, or there's not much more room to grow. However, the art of investing is basically to find this turnaround companies very early. Plus another thing that I didn't show today, but it's the case with Coty, that they have very high debt. So, you know, the balance sheet is not so great overall. However, let's see and follow up in the next couple of weeks and months to see how Coty can develop, if they can pocket the Kylie Jenner deal, which should give them also another push. So short term may be quite interesting to invest, but let's see, and I hope you could get some value out of this video. If you did, just subscribe, comment whatever you want to ask, and don't forget, the grass is greener on the other side. See you the next time. Thanks.